And Nancy, we've been for months covering this story now in China. It started with Alibaba, arguably last fall. Then you had the issues with Didi, their IPO here. We've seen them crack down on everything from after-school tutoring to video games, which can only be played 3 hours a week. Arguably, to Seema's point now, this property crackdown could be part of that. So do you sit back and wait for the end of this story, or do you see any opportunities as an investor?
No, Kelly, I think you definitely have to sit back. I mean, every investor knows that stocks are a claim on assets, and now you have the Chinese government in competing with you in a somewhat unpredictable manner. And so I think, however, I think from their standpoint, it's entirely calculated and well thought out. They're worried about the demographics that they face going forward. And so this is an attempt, a long line of attempts to get the middle class into a place where things are more affordable and they can have more children. And we really saw it with the for-profit school crackdown, and then, of course, all the ancillary aspects that you already mentioned. So I think investors need to be worried because you don't know who's next, and we also don't know what's going to happen with the currency. And so I think there are better places to be invested, frankly, and I wouldn't get near China for now and some time.
And does that then, Nancy, include U.S. investments that might have big exposure there? In other words, do you have to literally kind of go through companies in every sector and try to filter out the ones that might have big exposure to the economy there for the time being, or not?
No, I think you definitely have to do that. You're spot on. We've been running our portfolio's revenue against what the percent of the revenue is that comes out of China. Our portfolios are well below 10%. I think you have to be wary of the targets. So, you know, the government may react differently to chip providers because they simply have to tolerate U.S. providers, but that doesn't mean they have to make Nike products available, for example. So I think you have to really dig in, sharpen your pencil, and look at where you're getting revenues in multinational holdings and whether or not, you know, educated guess you think those revenues are safe.
Yeah, and again, just reiterate, make sure everyone understood you there. You're saying you're looking for maybe less than 10% revenue exposure for a lot of your companies now to China.